When people lose their jobs, it's just going to be a free fall of prices and a huge increase in listings. And that's when the fear, because there's no fear right now. The government's bailing everyone out still. The Bank of Canada said it in their release, like, we expect sales to increase. Well, of course you expect sales to increase. They've never been lower, right?
The housing market crash continues in Canada, and I have the great pleasure of having with me today John Flynn. Check him out on YouTube. John, how are you doing today?
Pretty good. Hanging in here. Housing crash. It depends on who you talk to. You talk to me, you know what I think. But you get one good month of sales, and of course, we're back to the races depending on who you talk to, right? So you got to be careful on the information you get, just like anything these days, right? Whether it's a virus or an election or whatever the case may be. Everyone's got a different opinion, but at the end of the day, all the stars are starting to align in my latest home buying recipe. I don't know if you saw it, you can check it out on my X there. But
yes, I did see it. I've actually got it here. I'll pull it up on screen. This one?
Yeah, and this is not just a gimmick, right? This isn't. I wish I could just say, this is just like a gimmick, but it's not. Like, I put like hours and hours of research into these relationships, right? And it's all led by interest rates, right? So when the interest rate cycle happens, these things happen at certain points in it. And I've projected like good opportunities to get in are the end of 2024 to 2025. And this is the start of buying opportunities. This is not the window of buying opportunities. So now it's not saying it's starting right at the end of 2024, but sometime end of 2024 into 2025. And you can see like these battery bars, I did this for ease of use here, visual stimulation. They've been filling in consistently, and unemployment's been rising, right? And the rates have been falling. You want rates to fall. This is what's going to make it's going to bring down your monthly payment, but this prices decline with falling rates. And of course, they're trying to stimulate the economy with these falling rates now, because they know trying to stick that soft landing, right? Which isn't going to happen, but this is what they keep talking about. And of course, mortgage arrears, they have been trending up. They're still pretty low there. And so when I say the stars are aligning, these things are falling into place. And if you think that mortgage arrears are never going to rise ever again, well, I'll say you're going to be pretty much sadly mistaken there, because they're going to rise. They are rising. We haven't even reached our previous lows on mortgage arrears, which was 0.23% in Canada as a whole. And this again was only from the 11 major banks in Canada, right? We haven't even reached that. We're closely approaching it. We're at 0.2% for total mortgage arrears in Canada. And so all these things are filling in as they should be. Maybe I'll have to take a bar away if unemployment dips down a little bit, but it's at 6.5 right now. It's only 0.1% lower than the previous month, right? This is when I'm going to upgrade my house, right, when all these things fill in too. So I'm putting my money where my mouth is, right? So
I love this, to be honest. I even commented on it there saying I love it. But yeah, like the unemployment as well, how much of that has really been public sector jobs as well? Like even the big banks are coming out with reports now saying a lot of the growth that we've had over the past couple of years has mainly been government and government jobs. So how productive are those jobs to the economy? I think it's all arguable with falling rates now, even though bond yields are on the rise at the long end. I think that's more just what's happening in the US. Everything follows the US, and it'll be interesting to see what happens with long bonds moving forward. But I think it's more like soft landing, because Canadian long bonds, they don't trade independently. They just follow what the treasury market does, just like the UK gilt market and other markets as well. So it'll be interesting, because obviously rates are going up for the 5-year fixed, but then they're coming down now for the variable. So are you seeing any signs that more people are looking and they're looking for variable rate mortgages?
So people that I deal with are still primarily on fixed rates, but I do see mortgage brokers starting to push the variable rates now, because it just makes more sense. They're trending in the right direction, right? It's funny. I want to go back to what you said about the government and how unemployment is kind of, the government, they use their tricks, just like always, where they offset their unemployment numbers, hire a bunch of government workers, and as you said, they don't really produce anything. Well, and we see this clearly. They don't produce anything because they just had like the big CRA breach of people's data that was stolen in Canada, and it was just like all their data was stolen. And what did they do? They went in these hackers, whoever it was, and they filed fake tax returns with people's information, changed the bank accounts on these people's profiles on their CRA, and CRA was just paying out like $6 million in fake tax returns. And again, we have more CRA, like as in IRS agents, just like in the States, than we've ever had, and they're producing, they're doing a worse job with double the people. And what sectors are offset, and I think it's similar in the States, it's the construction sector that's offset. So we're losing construction jobs and when we need more homes, and we're adding like useless government jobs. And it's funny, if you look, I looked on the government website just to see, and they're just like ridiculous jobs, like made up stuff, a lot of them, right? It's like, they're not going to do anything for the country, right? It is interesting. And it is just like, again, it seems like this playbook that they're all following different countries in the Western world anyway.
Yeah, no, I totally agree with you. It does seem that way. And a lot of these jobs, I mean, not only do they not add, they actually take away, because it's more regulation, it's more bureaucracy. It's just, we're becoming such an over bureaucratic country. It's unreal. But we could talk about this forever. I want to bring up, because we got so much data to go through here. So I've got the power of sales on the screen, as you can see right now, and they seem to be going upwards. And this is in Toronto, or is this across the country?
So this is mostly Ontario. I say most of Ontario, I should say. So the red is Toronto Real Estate Board, and this is Toronto and surrounding areas. It's not just the GTA, but it is some other areas included in their data. And the rest is the kind of 12 boards surrounding the GTA, because we're on separate boards around here. So this is, again, majority of Ontario here, of course, the biggest province in Canada. And yeah, they just keep trending up. Like, they will pull back at some point, I'm sure, at Christmas time, when, you know, the people, the lawyers who work for the banks are off for Christmas season. I'm sure they won't be processing them. But and like majority are the private lenders and the corporations, the mortgage investment corporations. You see a lot of them on there. Now, the big banks are in there too, and they have their fair share, but they're probably like 25% of these bank sales and power sales. So one interesting thing that we're seeing now is I'm seeing more mortgage insurer bank sales or power of sales come up from CMHC and Sagan or whatever however you say it, two of the biggest mortgage insurers in Canada. So and of course that means that the bank or the lender couldn't recover their funds and they have to give it back to the mortgage insurer. So the Canadian taxpayers are now paying for it. Well, with CMHC anyway. Again, not a high level, but I'm seeing more and more of those come into this data too. And from time to time, I do break down the data kind of to show where they're coming from. And last time, I think it was about 25% big banks and very few mortgage insurers, but now we're seeing more. So it's still a very low percentage, but they are increasing.
That is really worth noting, because obviously mortgage insurers, they're kind of like Canada's subprime. These are people who put minimum amounts down, stuff like that. You're also seeing the most risky loans, like the mortgage investment of corporations and private lenders. Those ones you're saying are increasing. Now we've got those mortgage insurers coming in. Like, how long is it going to be before, like, the average Joe and Janes, you start seeing more of them pile up? Because it seems like we're just going down the risk line here.
It's interesting that the mortgage insurers, they've been hedging themselves against or for these times for a long time now, and they've been expecting this. And of course, the government and the Bank of Canada, and they've created the environment for this inflationary environment with housing and everything else. So you haven't seen any big crashes, but they've been ready, because they used to be CMHC. It used to be 3.15% you would pay with 5% down, and now it's 4%. It's been 4% for almost 10 years, I think. So when you put 5% down, 4% goes towards your insurance in case you default, to bail out the rest of the Canadians, I guess, paying for it. And of course, now what was the next step in CMHC hedging themselves against a major, increase in sales and foreclosures and whatnot? They did it by increasing the limit. So now you get to borrow up to 1.5 million, actually up to 2 million if you have a secondary suite that you're going to create, but up to 1.5 million you can buy a house. So they're on 1.5 million, they're collecting even more premiums to offset the downturn when it happens, right? So it's like insanely ridiculous the way this system works. And like what CMHC just did was extend your limit on your credit card, right? Oh, yeah. oh, people are in debt, they're going to have trouble paying their thing. Well, let's just give them more credit, right? So now you can go back in and you can refinance your house up to $1.5 million or up to $2 million if you're throwing a basement apartment in. So you could literally throw a basement apartment for like $100,000 or $50,000 and increase your borrowing capacity by $400,000 on top of the $1.5 million.
Jeez.
I get emails from builders and the prices are so ridiculous. So just today I got an email from a builder and it was in Guelph.
This video was powered by ExpressVPN, helping you protect your privacy with the world's fastest VPN and the VPN that I use. If you want to take advantage of my special offer, go to expressvpn.com/marketmania. Let's get back to it.
I get emails from builders and the prices are so ridiculous. So just today I got an email from a builder and it was in Guelph. They're offering whatever incentives they're offering because they're trying to sell these places. It's like $1.4 million for this house. And in Niagara Falls, I'm getting these emails where they're releasing these new townhouses and it's $900,000 for a townhouse in Niagara Falls, like starting price. I'm like, $900,000 or $1 million for a townhouse in Niagara Falls is just like unheard of. Like I thought I'd never see the day, but this is what we've resorted to now because this is the only way we can keep this going. And the Bank of Canada or the government of Canada, they know, and this is why they've increased borrowing limits because they just want to keep this Ponzi going. Completely insane.
No, it is totally insane. And what are those houses going for the used resale market? Are they substantially less in Niagara Falls compared to new?
So yeah, so like for a resale townhouse, so now they are making them bigger and bigger, these towns, right? Well, the square footage, the lots stay the same size or get smaller. So they're trying to make them bigger, but it costs them a lot less to make a bigger townhouse than it does to make two townhouses of, similar size or smaller size. On the resale market, they're not selling. Like the resale market is so slow in Niagara, they're adding more units in these new homes, and this is how they're incentivizing, and they're still geared towards investors. They're not trying to get to end users in there, and this is what gets me, trying to get investors in. Here's 3 units in a townhouse, here's 2 units in a regular house, because they know an investor might buy it. Like, who's going to buy a brand new townhouse and live on one floor and rent the other 2 floors? Like, not many people. You would buy, like, why wouldn't you just spend $200,000 less, buy a townhouse, and maybe rent the basement if you needed to offset your mortgage or whatnot? And where's all these people going to start or going to park, right? They got to park somewhere, and they'll be parking all over the streets and the grass and whatever. And then I'm thinking, the street sweeper just came down my street, which is odd in the fall. I don't know why they never come in the fall, but they came in the fall. They're probably too many cars on the other streets to do them. And I'm thinking, how, like, I know these neighborhoods and I've walked these neighborhoods on my, my tours when I go out. Like, can you imagine being a street sweeper or a garbage man on these streets with cars all over the place? Like, you couldn't even, like, what's the point of even going down the street? You can't even make it down the street, right? So there's just too many people. These neighborhoods, when they haven't really been designed properly. I mean, I've seen the same thing in Calgary and BC too. Like, you just have cars absolutely littered everywhere in these new communities, which just kind of sucks. I mean, it's not nice having cars just absolutely everywhere. And some of these families have like 7 or 8 cars. Yeah, wait until they grow up and their kids grow up, right? Well, those ones probably have grown up, and they'll say, well, we're going to make public transit. Okay, where are you going to make the public transit around here? Like, there's, like, you still have to, like, take a car to get to the bus, like, in many places. Like,
and they can't even build that subway line, which they've been trying to build in Toronto for like so long, and it's cost so much money. Like, they can't even do that. Whereas, like, in Mexico, they built a whole new train line, like 300 kilometers in the same amount of time. And all the jobs that have been created to hinder the process of construction.
We create jobs to stop it instead of creating the jobs to do it.
It's no wonder that productivity goes down. So I'm just going to bring up this other chart here. This is the average sales price now for Toronto. So we're looking at September data, and we're here in November.
We don't have the October data yet. So this is why we were supposed to make this video a couple of weeks ago. So it's all good, but it's all relevant. So go ahead.
No, it is exactly. So you're basically actually seeing the prices start to trend down a little bit now. So we got the year over year data here for Toronto.
Yeah, so this was from September, but it's relevant because we're seeing the same trend in October, and of course prices aren't going to the moon anytime soon. So this was just to show, like, let's take an honest look, right? Let's stop being biased like I am here, and let's take an honest look at what's going on. And prices have been flat. Look, if you look back to 2020 was lower, obviously, but 2021 was significantly higher for September. And you look back, like let's say it's flat at best, right? So when people, and how many times have you heard and been told prices are going up in this time frame? Like, and I've said this, I think, on my last video, and yeah, they're right. The realtors are right. The prices are going up in the spring, but then I've been right where the prices are going down. But this is seasonal, right? So looking at the trend, 4 years of flat prices, actually declining if you count 2021, which is higher, right? But it's flat at best. So we've been trading sideways for years now, and all that hype about going up and going down, it's nonsense, right? It's this is the reality. And you look at the average price for the whole year of Canada, it's the same thing. It's like hovering from 680 to 700 or whatever. Still way too high, but we haven't had a recession, and we haven't had really high unemployment or anything yet, as per the home buying recipe. So this is why, and of course the government's been doing their extend and pretend. First it was the banks, right, with the negative amortizations, extend and pretend, and now the government's doing it. They're extending to 30-year mortgages, and they're pretending that things are good, and they're extending your credit limit now to 1.5 million uninsured mortgages, right? So they're extending and pretending. So there's, again, all this book of tricks is being played out. Again, flat at best, right?
Average listing days on market, so they're going up substantially year over year.
Yeah, and look at it from 2020. Like 2020 was half and half, that year with the pandemic, and so the first half would have been substantially higher days on market, which was offset by the second half, which had low days on market. But yeah, look, they're going up, so it's taking longer to sell your home. And again, this is one of the biggest markets, or the biggest market, sorry, in Canada that we're looking at here.
Yeah, so you've got, obviously, and here we go, a lot more inventory that is coming onto the market, which is having a huge impact. So months of inventory now, 5.1 months compared to 1 in September 2021.
Yeah, so, and this is, again, just the trend, right? So it's supply and demand. People always say, well, like, prices aren't going to go down, all the new immigrants, supply and demand, supply and demand. Okay, well, here's the proof. Supply is increasing. And so now, is that going to bring prices down? There's always another excuse, right, not to bring prices down. But again, we're seeing these higher levels consistently now. This is not just 1 month that's cherry picked. We're seeing it in every month, higher year over year. And it's going to have an impact on prices eventually. And as soon as somebody loses their job, I think I just saw a post from you, someone in Alberta that was looking for a job, and they have a bunch of credit.
Yeah, over 20,000.
Yeah, and that's what's going to happen, right? When people lose their jobs, it's just going to be a free fall of prices and a huge increase in listings. And that's when the fear, because there's no fear right now. The government's bailing everyone out still. Even Doug Ford's going to start sending out $200 checks to every person in Ontario now. Like,
oh, really?
Yeah,
I haven't heard that.
Yeah, even the Conservative government of Ontario, they're turning friggin' socialist, and he's going to send out checks to people, $200 for each person, not just each household.
Oh, wow, they're copying Alberta.
Yeah, instead of, I guess, he balanced the budget or whatever. I don't even know what the reason was, but they had, they did pretty well with tax time. And instead of, putting it into the right projects and whatever else and growing properly, he's just going to send out stimulus checks so people can go out and I don't know, go to the beer or buy their liquor at the grocery stores or whatever he set up now. But yeah, just again, I understand he wants to keep the economy going, but giving stimulus to people is only a short-term solution, right?
No, yeah, exactly. And I mean, it's like directly inflationary as well, which the central planners don't seem to understand. And one thing we forgot to mention with the average sales price, 2021 to 2024, you've had the highest inflation in like nearly 2 decades as well. So even though these are flat, like your purchasing power, if you bought in 2021 and then you're selling at 1.1 in 2024, that money is not going to buy you nearly as much. I would argue it's 30% at least, at the bare minimum, your purchasing power is going to decrease by 30%. But it could be even more than that, depending on your circumstances and what you're actually purchasing. So it's absolutely crazy.
If you put that to real prices, of course they've declined, right? So
yeah, exactly. It's and then going back to this from the inventory, you're also seeing that sales are not really doing anything. They're still scraping the bottom here.
So this is actually the most important chart right here for what you're going to hear in the next, or starting now for November, for October data. So sales have increased a little bit, right, year over year from September this year to last year. But October, you know, saw an increase too. But we came from like these ultra low sales numbers, and you'll see a similar chart in October, and everyone's going to be screaming sales are up. And you know, even the Bank of Canada said it in their release, like, we expect sales to increase. Well, of course you expect sales to increase. They've never been lower, right? They really can't get any lower. And we have, like, let's not, we're not even talking about sales per capita, right? We had in sales per capita that they're not increasing. Yeah, they're like, they're gonna be screaming from the hilltops next week, or in 2 weeks from now, depending on whose data you're looking at. The national data will be a couple of weeks, and the regional data will be next week. Early next week, we'll start to hear it. Sales are up. Get out there and buy. You know, because the interest rates came down, and the interest rate argument is the biggest BS going, because interest rates, fixed rates, which is the main product people have been using, now they are starting to flip to variable if they're smart. They've been coming down for a year. Since October last year, we were at like 6.5 or even higher for fixed rate mortgages, and they've been coming down way before the rate cuts, and they stopped. Actually, they were going up at our last rate cut, but everyone's still, rates are down, and the rates and the fixed rates are going up, and they're going and buying houses and saying this is the best time and get in. And I've seen it. I've had people that follow me and that have been waiting on the sidelines. They're like, okay, should I buy now? And I say, look, like, we're not even into the start of good buying opportunities, or, you know, so no, like, and you got winter coming. When winter comes, that there's more deals to be had. You save $50,000 to $100,000 these days in the winter. Not as much inventory to choose from, but again, you can save 50 to 100 grand if you wait just a couple months. Yeah. So you got to watch, again, not trying to be biased here, but here's the sales numbers. If you look at 2020 and 2021 there, they were record sales, but we're down to like average levels at best now. And again, average levels at best, but our population is how much more than it was pre-pandemic. Like, our population's grown by millions of people, right? So sales are still very low, but again, average at best, and it's actually below average at best. But regardless, this is what you hear, right? The media, sales are up. When sales are down, well, sales are down, you know, and sales are up, you know, better go buy. Like, it's never like sales. They never say sales are down, you should sell your house, like, get out of the market, like, or your rental property or whatever, right? Like, just, you know, get rid of it before they drop even further or whatever, right? It's only the one way, right? Things only go up.
Yeah, exactly. Am I the only one who's looking at this data and thinking it's a little bit suspicious how September 2022, 4,998, September 2024, 4,996. It's almost like the government, where the stats are coming in so close together. You're like, did somebody just make that up?
Yeah.
I mean, what are the chances? Yeah. I mean, I don't think it is anything, but
it's the trend, right? So, and this is what I look at when I look at forecasts, is it's trends. And yeah, you can tell, like I said before summer, I said there's a 95% chance that prices are going to go down in the summer, and like, because I knew it was going to happen, right? It happens every summer.
Yeah, exactly. Yeah, and that's great advice, by the way, about buying, like, if you can, like, you have less to choose from in December and that time, because that's also when you get like the distress as well, because generally people who are selling in that, they need to sell. Like, other people aren't going to be so bothered.
Oh yeah, if you list in December, you're desperate. You're a sitting duck. Like, nobody lists in December or January, even unless you have to. January, not so bad, but December, forget about it.
Yeah, exactly. So great time if you're on the buying end of that. So this is September average sales price, 2022, 2023, 2024. So up 5.6% since 2022.
So yeah, big increase over last year even, right, for the sales price, the average sales price. And this is in the area surrounding Toronto or the GTA. You see that big increase, but again, it doesn't mean prices are going up when you look at the long-term average. And this is, again, 1 month data. and we had a very slow summer. So certain years we see trends where September is a stellar month and October might follow, and then November is terrible. And other years we'll see September's flat over July and August, and maybe October is too, but then November picks up. But it depends on the year, right? But you usually see a pickup in the fall at some point. And in this year we saw it in this area, we saw it sooner than the other ones. So again, don't be alarmed because prices are going up, because the long-term trend says prices are actually the same or worse than they were 2-3 years ago.
Yeah, exactly. And also, like, again, like 5.6%. Was that a great investment if you bought in 2022 and you got 5.6%? Well, pretty much everything outperformed that, right? So
yeah,
putting
definitely.
your money in the stock market, anything.
And the carrying costs and the maintenance costs and whatever else, right? So
exactly. So September average days on market are up substantially, though. So that should be putting pressure on price, at least causing a headwind, I would think.
Yeah, and you'll see the same for October. It's going to be the same trend, compared to the previous Octobers. Days on market's up. And why is days on market up? Because inventory is up, right? And it's just there's more houses to choose from. So people now are like, I don't like this house. Let's keep looking, right? Or I don't like the layout. Before, they were like, I don't care. I'll buy it, right? And so that the market mentality and sentiment has changed drastically. And it's for the good reason, right? Instead of just settling for any house, they're being picky, and that's what you should be as a consumer. You should have the ability to choose what kind of a style you like and how many bathrooms you want, especially when you're paying these prices. People were paying record prices, and they're like, I hate the house. I'll give you like 5-10% over it, the list price.
Yeah, and without even seeing it. I mean, how many people were buying homes? They were just shopping for them online and buying it. I mean, it was just complete insanity during that time.
Even now, you have to watch, because that strategy took 10 years ago, or the last cycle, we didn't have this strategy. So there's a lot of like fake news, I guess it is, in the real estate market. So there was a post somebody posted. I think it was one of the people I follow. They posted their friends was a realtor, sent them a screenshot, and it was in Oakville, and it was a house. It turned out to be a townhouse. 38 offers. This is just last week or this week. 38 offers, because we get to see, as an agent, if we showed the house, we get an update how many offers. So of course it was way underlisted, like the market. But again, showing people like, I got 38 offers. The market's crazy, and you're like, oh boy, I better go buy now, right? So I looked up the house. Of course, I can't tell any addresses here. There was other homes for sale and that have sold, and they were around 1.2 million. This house was listed at 699,000 and they got 38 offers. Of course you got 38 offers. The house is like well over $1 million. Now we followed up on that and didn't sell. Of course, when you do that list low strategy and it fails, because they probably didn't even get over $1 million, I'm guessing, then you have to reject all 38 offers. You have all 38 people, plus how many people showed that house that didn't even put an offer. So you just wasted all these people's times. 38 agents wrote offers and you didn't sell, and then you put it back on the market at 1.15 million or whatever they did. So it's just like, and I don't know how they didn't come out with new rules, because they have come out with new rules this year for realtors, but there's nothing to address that. So that's like putting, when you go on Facebook Marketplace or Kijiji or Craigslist and you see a $20,000 car on there, and when you're browsing for a car and you see one for like $8,000, like it's a scam. You're like, this is a scam, and they get reported, right? And no one legitimately will put their car and say, well, I'm waiting on offers, so submit your offer by Saturday, and I'm going to choose one maybe. And then of course you're going to have all these people submitting offers. It's like an auction, right? But it's, I just don't know how. It's the only retail industry that sells products like this, and it's the biggest product that you're buying.
I know.
And it's not called an auction. It's not like, if it was an auction, sure, but it's not called an auction. It's called list price. They were listing it at this price. Okay, so what's the price? Well, we're going to see what the price is. They want to know, and then agents call them up. So what's your expectations? Well, we expect the best price. And then they get the best price and they don't take it.
And the funny thing is, like, let's say when grocery stores misprice stuff. There's an actual thing, I forget what it's called, but there's an actual thing, whereas if you go and then say, no, actually you have to honor the price that you advertised it at, they have to, like, it's in the, I forget what it's called, like the scanner price charter or something.
Something like
They're
this,
all, yeah. So they have to honor that price. But in the real estate market, as you point out, like, it's the largest purchase and they don't have to honor the price. Like, you could be giving them full ask. Most people would be given above full ask, and they're still going to say, no, we want more.
So yeah, and if you remember, I've done videos on it, but they the market and the consumers wanted like open bidding, because this blind bidding is like a scam, and they were overpaying, and it was just the realtors would come back and you'd be the highest bid, and the realtors would come back and say, hey, you're close, but can you offer any more money? And you've already won it by $100,000, and you'd say, okay, I'll give you another 50, and they're like it's just like highway robbery. And this has happened. People have emailed me stories. I've seen it on myself personally, but they've emailed me stories where the owner has been like, no, like, I'm happy with this price. She's like, don't worry, I'm going to get you more. She's like, I'm honestly happy with the price. And they're like, no, watch this. And they like rip these people off. And they like, I feel bad for these people. Like, the owners of the house are feeling bad for the seller or for the buyers. And
this is disgusting.
Yeah. But of course they came out and they created a new law, which was open bidding. So we're going to allow open bidding. It's for consumers and blah, blah, blah. Nobody has used it because it's up to the seller to use it. So everybody puts in offers. All my clients, I say, well, you're putting in an offer saying if they disclose your price, your offer's void, right? So it's not going to work. And then the sellers are not using it. It's up to them to solely decide if they want to use this open bidding process. And then they're never going to use it. So it's just like nothing has changed. So they created this whole new law with open bidding, and they were bragging about it, but nothing's changed. Like, nobody does open bidding.
Yeah, that is crazy. Yeah, they should force people to use it, because that is just nuts. And I think in Australia, which has a market so similar to Canada as well, they actually do this now. So they have open. I've seen the videos on YouTube where they're on the street, they're all stood on the street, and people are just bidding, and it's like an auction. They actually have to have an auction person there.
Yeah, no, that's the way. But it's I think they call it an auction process, which is okay. You're calling it an auction process, and their prices still went to the moon anyway. But I don't think we probably got 10% overvalued at the peak because of the way we do it, right? Where it wouldn't have got so out of hand if they had done it like Australia. But Australia has their own problems, obviously, too, right?
Some of them very similar to the ones in Canada as well. So moving on, September sales are down substantially.
Yeah, and this is. So when you look at the September sales now, again, it's like anyone. Sometimes you have a good month in sales. Sometimes you have a bad month in sales. Any salesperson, anybody that's in the business of sales, right? So of course, September, maybe that's the market crashing. Maybe they had a bad month, right? I probably said it was the market crashing when I went over this data on my video, but maybe it was just a bad month or whatever, right? But it has been trending down, and of course, now you're going to see October is going to be up, and they're going to say, well, the market's bounced back, and it's but it's just a month-to-month thing. But you have to look at the previous Octobers, and I think now you'll see October's data is going to be up over October last year when it comes out. But we'll see what happens. But of course, one good month and the market's rebounded, according to the media and all the market bulls, right? So
yeah, and like nothing goes down in a straight line either. You're going to have swings and roundabouts. Even if you look at the unemployment chart, which we covered in your home buying recipe earlier, like that is not going up in a straight line. You've got bumps in that. Some months are worse than others. And I think, it's nothing less than what you're going to see here as well. So you got months of supply going up. This all begs the question, actually, like what is even causing the price to rise? Because everything seems to be, like all the underlying data at least seems to be pretty negative for prices.
So the prices haven't risen. If you look at individual months, you can say, the price went up, but overall we've been trending sideways, and we've actually had lower highs going forward nationally, right? So we've had lower highs. Overall, the price is flat at best when you look at the big picture. what's maintaining that price again is the lack of recession. The unemployment's still reasonably low. It hasn't spiked. The mortgage arrears, because the mortgage arrears are going to create a lot of inventory when those start to spike too.
Yes,
and a lot of opportunities for people. So, and it's all competition when it comes to sellers, right? They're going to be competing against each other. Before, sellers weren't competing. Now they're competing. I got listings, and like it's a tough job. You got to work at selling these things, and the sales rate is like 30 to 40% of all new listings sell. So it's tough to sell, right? Right now in my region. Of course, you get to Toronto, it has to be priced right in Toronto, or it's not going to sell. So yeah, there is this demand, but demand is only supported by prices, right? Like if the prices were half of what they are now, sure, you'd have record demand again. Of course, that's not the case. But yeah, prices are just being maintained at best, and it's because we haven't had a significant, I guess, black swan event or whatever the case may be, or rising unemployment or anything. And of course, the government has been stimulating the economy with 30-year mortgages and all sorts of things, creating government jobs.
Yeah.
And so, and of course, sorry, also on top of that is the also been increasing immigration and population and they're very clear, it's to boost GDP. So we've had all this fake, and what does that do? Housing would be significantly affected by that increase, because now you have these people that can rent the houses out to all these students, all these immigrants, whoever the case may be. One thing, the messaging from the government now is getting really messy, in my opinion. Chrystia Freeland and the immigration guy, I think he was out, they were bragging about how rent prices have come down in Vancouver and Toronto. And I think they were saying 8%. I haven't verified the numbers, but the fact that they were bragging about it. House prices haven't come down, but rent prices have come down. And we've had record population increase in growth, but rent prices are coming down. I'm just, how does this all work together, right? Like it's contradictory. Shouldn't rent prices be increasing? Because they're still a lot lower than mortgage payments would be for the average house. 85%, I think it was your video I was watching, but like 85% of like certain areas have are owned, like condos are owned by investors in certain areas, right?
It's like that's right.
It's like 50% or something, or 60% in Ontario, or something like that. You don't want prices to come down, but they're happy that rent prices are coming down, but you'd never see that come out there. House prices came down. This is a great thing. They should be saying this, but because their voting base at 66% of eligible people are homeowners, they can't say that, and they won't say it, and nobody will say it. But rent prices. So how do the investors feel, and the boomer investors, whoever it is that stole all these properties or speculated on these properties? How do they feel that rent prices are coming down and the government's bragging about it? Like
that's true, yeah, and I've seen that as well. Can tag on to Toronto and Vancouver. Calgary was down 5.6% or something like that, and that's been one of the booming markets as well, which actually brings us on nicely to Calgary. So I'll bring in the data from Calgary. So this is actually October data, because they're one of the first to put it out here, and it looks like months of inventory are on the rise, sales are on the decline,
and even the benchmark price, which I don't like. I don't like the benchmark, but anyway, the average prices.
How do they calculate that?
Okay, that's a good question. So I like to know the data behind and the equation. So if you go to like CREA's website, and because it's them, realtor.ca, and how they calculate it, it's just like very vague. Well, we have a formula, and then we change it from time to time, but it's supposed to be based off like an average house. So they'll say, well, you can't just take an average, because that includes condos, detached, whatever. It's not as accurate. So they'll say, well, we're taking a typical 3-bedroom house, and that's going to be right our benchmark, right? And that's how they I guess calculate it. But there's no formula out there for you to see, which I don't like. It can be manipulated, or it can be changed, and they do make changes to that formula from time to time. But yeah, so regardless, like it's down. If you look at the chart over on the top right there, look at the inventory, and I think I was talking about this with you before. Their months of inventory bottomed out, so they had the lowest inventory for a long time here was this year. And Ontario and Vancouver, theirs would have been 2 years ago in 2022 when the prices peaked. Well, Ontario especially. Right. So they're like behind, and look at their trend, right? But they're behind us by 2 years, Calgary. And of course, their prices peaked this year. Our prices peaked in Ontario in 2022. So both their inventory levels and their prices are behind us. So it's very obvious lagging part of the country here. And of course, all the investors, so many investors, when they couldn't make money or losing money in Ontario and they saw prices going down, they went to Calgary and they went to Edmonton to throw their cash there at the next bubble. But it looks like looking at that chart that we're at we're back to 2021 levels, almost 2022, 2021 levels. And if you look at the end of last year, it was a lot lower than the end of this year. So yeah, it's a good thing for Calgary. Inventory is increasing, and you hear that on the news and from other realtors that it is increasing. And they'll say, well, it's only in this kind of home or on that kind of home, but it doesn't matter. Overall, the inventory is increasing.
Yeah, which is a good thing if you're looking to buy a home there. You also got to weigh in on this, because I just looked it up whilst we were talking here, and basically the rent prices in Calgary, I just want to show you this. So this is it's just skyrocketed, this chart. This shows when all the investors started piling in, which is actually surprising because really it started around 2023, but this year it has just gone parabolic. So you've seen like rental inventory here. It went around from, this is just this year, in April, May, it was around 5,400, and now you're nearly 9,000. Wow. So you've just skyrocketed. And then if you look at the rent prices, as you would expect, they are down. And I just calculated it's over 8%. Rents are down, and this is not adjusted for inflation. So adjusted for inflation, even lower than that. So like, that, of course, puts the pressure on this part of the equation for investors, because if investors are stimulating this market, well, why are they going to stimulate a market if rents are going down?
Yeah, and this is all part of process too, and the trends that what happens, the reason rent prices are dropping down is because there's more rental supply and they're competing. When there wasn't enough, the landlords or the owners set the prices, and they can set them at whatever they want, and they'll keep trending up. So it's actually harder to bring prices down than it is to boost them up, right, in general, especially when you have limited supply. But now we're seeing so much supply in the rental market that prices are going down. But you'll also see people start to enter the market now in the next couple of years when they have good opportunities to buy, those opportunists, right? And we're not talking about crazy opportunities, just regular, I want to buy a house opportunity. What's going to happen when, and immigration's down and students are down, and so you have a lot of pressures on the rental market right now, downward pressures. Yeah, so what's going to happen to house prices when those tenants are now buying the homes? And we already have there's going to be more rental inventory. So we're going to see this dynamic where it's not going to boost house prices when a subset of the economy or the housing market now is losing clients, which are tenants, right? It's gonna put more downward pressure on house prices because they're flipping. And I've always said the investors are the key to supply and demand, especially in the last 5 years. They stole all of the supply with a lot of speculation. They're not doing it to be good landlords and to have a lifelong investment. Most people, some of them are. No. But they're doing it to make money and capitalize on the market. So they stole tons of supply from the market, from families and whatever else. They are going to be the ones giving it back, and they're the key. And they're going to flip the supply significantly because they have such an impact, as opposed to people like me that want to upgrade or something. I'm giving a house to the market when I sell mine, and I'm buying another one. So I'm neutral. Old people dying and going to homes, those are positive towards inventory, right? They're giving inventory to the market. And of course, the investors are the key. They can go either way. And right now they're going to be giving inventory back when they can't rent their places out. Or the bank takes it and sells it for them.
Yeah, well, exactly. And that's going to happen in a lot of places because so many places got overblown. I mean, I remember when I was in Milton, Ontario, and like all these new subdivisions would come online and people would be lining up, and then you'd eventually see them when they're built, and like over half of them in a lot of cases were just rentals. So they were just people who were speculating. So obviously if you've got just such a large percentage of people speculating, then it's going to influence supply and demand. And I think what you said there is so good. It's key. It is the key to supply and demand, because a lot of the mainstream media actually frames a narrative around like the regular people, right? Like it's like if you look at Calgary, for example, like it's all the people that are moving to Calgary. Well, no, when you look at at it, actually, that's like a small percentage of it. It's all the people that may be speculating on the back of that narrative, the speculators, it's the investors that are driving it behind the scenes. But it's always the narrative that it's the average person just moving along. I mean, even in the GTA in the pandemic, it was, oh, everyone's moving out to the suburbs now, which they were, but it was mostly speculators who wanted investments and things like that.
And, you make a good point. And what I've realized is from talking with people that would still come to me and, want to invest in real estate. And I'm just like, my heart's not there unless you're a family looking to buy. Like, it's the honest truth, right? You want an investment? I'm not the guy to call because my heart's not in it for you. But they do say to me, like, when I say, like, why do you want real estate? Like, it's flat and you might not make any money and you might lose money. Like, I want to be honest with them. And they say, well, what else am I going to invest in? Like, they just don't have faith in anything else. And I think with real estate, they actually see a tangible asset, and it's a big asset, and it comes with land and whatever. But the story is, what else am I going to invest in? Because they see the stock market as like the casino, right? And real estate's in the same boat, but they don't judge it like that, because you actually get to hold something, even if the bank owns it. So yeah, we need other things to invest in Canada, and even if people could like invest in constructing houses instead of just buying them after they're constructed. Like, when they talk about purpose-built rentals, like they need to have some sort of REIT that you can buy in with, like, a purpose-built rental REIT that only constructs rental housing that's, on sound business practices. But we don't have that unless it's a commercial. Like, REITs are commercial entities, right? They deal with commercial buildings and whatnot. They don't deal with, mom and pop, let's get a 10 unit or a 30 unit building, right? That's not what they focus on. They focus on the big, commercial real estate and industrial real estate. But it's people need something else to invest in Canada, and it seems like real estate is the only thing besides the stock market that you can choose.
No, I think you're totally right, because the economy, like, if you think about investing in a small business, like, let's say you and we start up this grocery store in Niagara Falls, like, who are we competing with? Like, it's going to be impossible for us to survive with our grocery store against Loblaws, Metro. And even if we did do pretty well, they're just going to buy us out anyway, because that's all that happens.
Well, yeah, and the government doesn't incentivize small business, operations and whatever else, because they want you to work and pay your full taxes. They don't want to give tax break to corporations. So even small corporations at this point, they are running that kind of more socialist agenda, and will pay for everyone's dental care and whatever else. Well, they're trying to, but they don't want to incentivize. Like, who wants to own a small business? So I get no dental, I got no nothing, I get no benefits. Like it's just not very attractive in Canada, and you're struggling, and the government's going to come in and shut you down because of virus, whatever the case may be. Like, it's just so risky. And they'll say, well, you can borrow money to stay afloat here. We got a special program here. You can borrow while we shut your doors. And they're going to regulate you out of business on top of that, right? So
yeah, that is true. The red tape and regulation stifles a lot of it off as well. We just have to have like massive change here in order to get more business investment versus it all just being sucked up by the housing market. But then again, like, the US saw the same thing happen, where the housing market was such a large component of the economy. It was sucking up all the capital, investment capital, everything. Then the bust happened, and it didn't go into that place right away, at least for 7 to 8 years. So it did change.
And nobody saw it coming, but like one guy in the whole country. He's like, I saw it coming. It took a little longer than he thought, but he saw it coming, right? And it always takes longer than you think, right? So,
well, you know that we're going to be cast in the Big Short Canada movie. Me and you.
I think I should start. Actually, I have a lot of data. I don't even have to research. I already have all the data.
Well, let's get a script together and send it to Warner Brothers. Well, John, thank you so much. Have you got any wise words of wisdom to leave people with?
No, my wisdom has left me, but I will say this. I do have some quick stats here, just again, for a little perspective on things, just so you know where the market's at. The market's flat at best, but looking at the September numbers, and I will do the October, I'll do the same for October when they come out, the national numbers. These are national Canadian numbers. September 2024 was just under $670,000 for the average price, which is ludicrous. The average house price price in Canada, right? $670 in September 2024. In September 2021, the average price was $15,000 higher at $685,000. So we are actually lower than September 2021 in September 2024. Going back even further, February 2021, and this is way before the peak in Canada, mind you. This is a year before the peak. February 2021 was $676,000, and this September we're 670, so even lower than February 2021. So when they tell you prices are going up, you should go look at history and see 3.5 years ago we're lower than then, and October's numbers will be even worse because the prices were even higher in October 2021 than they were in September 2021. So yeah, just be careful where you get your information and look at history to see where we really are.
Yeah, get your information from John Flynn's YouTube channel. Yeah, no, that is fantastic point, John. Thank you so much, and please go on and check out John's YouTube channel. It will be linked in the description below. I want to thank you so much for watching this, and I will see you in the next one.